Hey, what's going on, gold and silver bullionaires? Welcome back to the Gold Silver Brief. So, as everybody is aware, gold has made its move. The gold to silver ratio just flashed a signal. Silver has not yet done what it historically does. There's one missing ingredient. And if this specific shift happens in the physical silver market, not the paper market, the physical silver market, silver doesn't just outperform gold, it accelerates violently. Today I'm going to show you exactly what that trigger is, why it matters, and why I'm watching this very closely before I get aggressive. So guys, let's zoom out a bit. Gold has broken out as we've discussed, and it's held this relative strength. Central banks continue accumulating gold at ridiculous levels. Macro uncertainty is elevated, real rates are volatile, and the dollar has obviously shown instability. The world is in shambles. The political climate is chaotic. Historically, when this happens, silver lags gold early in the cycle, but then something changes. The gold to silver ratio starts to compress. Liquidity rotates, and silver starts moving at 2 to 3 times the pace of gold. We saw this in 2009 to 11 and in prior inflationary expansions. And here's what a lot of people are missing right now. This current cycle has a different potential driver for silver. It's a confounding factor on top of all these things that I just previously mentioned. But let's talk about that missing ingredient for a second as we look at silver. So this missing ingredient for silver this isn't just about hype. It's not retail speculation. This is not Reddit. It's physical market stress, and we've been hearing about this for a while. Silver has been in a multi-year structural supply deficit. Industrial demand, especially from things like solar, electrification, advanced manufacturing, it continues to absorb the physical silver supply much more than people are letting on, much more than people realize. Unlike gold, silver is heavily consumed. Much of it is not recycled, it's actually used in manufacturing and these other sectors. That means that inventories matter a lot. If physical inventories continue to shrink, if registered exchange supplies tighten, if real metal demand begins pressuring futures prices, that's when the market structure really starts to change, because at that point the price is no longer primarily driven by paper contracts like it is today and has been for basically forever. The price of silver now becomes driven by availability. And when availability becomes constrained in a relatively small market like silver, the moves can be non-linear. We've heard about this for a long time. We talk about bullion dealers, online stores, even local shops being constrained and having a hard time meeting the demand of physical supply. This is what we're talking about. These paper contracts cannot be fulfilled by the shape in which the physical market is in. So, this kind of thing matters a whole lot more than just a Fed pivot, a Federal Reserve pivot, or something like that. This goes beyond tariffs and everything else. A lot of people think that silver's explosion requires that Fed pivot, rate cuts, some kind of dollar collapse. Of course, that would absolutely accelerate things, but silver doesn't need all of that if the physical imbalance becomes the dominant force. So when physical demand overwhelms available supply, short positions become very vulnerable, spreads widen, delivery premiums expand, which we're seeing a heck of a lot of, price discovery shifts, and because silver's market is much smaller than gold's, it doesn't take trillions to move it, right? It takes simply imbalance. So, if we just look at a couple headlines, and we're not going to go through these really, guys, but what I'm watching personally, what I'm monitoring and studying closely here personally, exchange inventories. So are registered supplies declining consistently? The gold to silver ratio, which we've been looking at, does it continue compressing from extreme levels? This is 5 years. Let's go all. I showed you guys this chart the other day. Here's 2011 during the recession. when we saw this was the last time that the ratio was significantly compressed back to like a normal level. COVID hysteria absolutely went the other way. Gold was killing it and silver was just totally dirt cheap, no attention whatsoever. And just in a short amount of time, 5-6 years, guys, look at where we're at. We've stabilized right around 60 ounces of silver for 1 ounce of gold, but continuing to compress well below the recent multi-year average, really as low as it's been in over a decade. What else? What else are we watching? Physical premiums, which are insane right now. Are we seeing stress in retail and wholesale markets? Yes. You look at any online bullion website and you're going to get something like this. High demand is causing delays in processing, shipping, and customer support response times. So high demand, crazy premiums, which we're not even going to get into right now, but industrial demand trends as well, solar, electronics, those projections, are they holding firm? Well, yeah, for the most part. We're not really seeing much of a slowdown in the tech sector. And with these data centers and quantum computing and AI and everything else, guess what? It's all going to require silver, probably massive amounts of it. So if those things all kind of align at the same time, gold remains structurally strong, that's when silver historically stops grinding and then starts sprinting forward. And again, here's the interesting part about all of this. Most silver investors are still positioned very emotionally. They're waiting for that $15 again. They're not in the same boat that I'm in here. Or they're permanently anchored to 2011 trauma. I'm glad that I wasn't a part of that, but markets don't care about our memories, guys. They care about structure. If physical stress builds quietly under the surface, they won't, the move isn't going to just announce itself, right? It's just going to begin and start happening. So guys, let's bring this home. Just to be clear, I'm not predicting a silver explosion tomorrow. I'm saying this. If physical imbalance becomes dominant over paper pricing, and I've been saying this for years, not financial advice, but the writing's on the wall here, guys. Again, I can't predict the future. However, these are facts. We know this. If the physical imbalance becomes dominant over paper pricing, silver doesn't just follow gold, it reprices. And when it reprices, it tends to do so pretty aggressively. So guys, if you want calm, structured analysis as this whole thing develops, all I ask is subscribe to the channel. Welcome back to the Gold Silver Brief. Glad you guys are here. Because if this trigger activates, we'll see it forming in the data here first, and I'll be keeping a very close eye on it. We'll be tracking it. We'll be going through it together. So thanks everybody for tuning in. Stay tuned for the next video. Big things to come on this channel. Catch you guys in the next one. Thanks.